Okay, we are live on LinkedIn. I can see that. And yep, we are live on YouTube as well. So I'll give it a start. We have around 50 people watching this stream right now, and more people joining. Okay, awesome. Awesome. Okay. Hey everyone, welcome to another session of the Alt Extra series where this time we'll understand what invoice discounting is and how it works. We'll also discuss the various options available to retail investors to get exposure to invoice discounting as an asset class for their portfolio. And today, to discuss this topic, we have Manu Prakash from CredAble and Siddharth Sangal from Grip with us. I'll quickly introduce these two gentlemen for you. Manu Prakash is the managing director and head of partnerships and FI coverage at CredAble. Manu has over 16 years of experience in the banking industry with his expertise in transaction banking, product management, and especially supply chain financing. And most of you know, invoice discounting is probably the most common way of supply chain financing, also, which Manu has deep expertise in. At CredAble, Manu helps in developing and nurturing strategic partnerships across the organization's product portfolio. Before joining CredAble, Manu was heading trade and product for SMBC APAC in India, SMBC being Sumitomo Mitsui Banking Corporation. It's a bit wordy, but yeah. Manu has also worked with leading financial institutions like HSBC, Standard Chartered, and ICICI. So, lots of deep domain expertise that he brings onto the table for this webinar. Uh, Siddharth Sangal is the group CIO at Grip Invest. Siddharth leads the origination and structuring team at Grip. His team is behind all the curation that happens to bring all the unique SDI opportunities that you see onto the platform. So all the InvoiceX, LeaseX, LoanX deals that you see and subscribe or invest on the platform, Siddharth and his team is behind all of that. So, welcome Siddharth and Manu. Thank you. Pleasure to
Thanks,
host you today. Awesome.
Thanks,
For
Yash.
our
And Manu, good to have you back.
Good to chat again, Siddharth.
Awesome. So for our audience, I'll just set some more context. CredAble, which Mr. Manu represents, is India's largest working capital and trade tech platform, which enables more than $3 billion working capital annually. They cater to trade requirements of India Inc. Including all the large, mid-size emerging corporates, MSMEs, and all sorts of financial institutions. So it is fair to say that Manu and his team at CredAble have a deep understanding of the invoice discounting space and the various permutations and combinations of investment options also available to institutional investors and retail investors in this space as well. So today with Manu and Siddharth, we'll discuss invoice discounting as an asset class, different options available in the market to get exposure. We'll also do some comparisons between InvoiceX as a product and the regular invoice discounting product, which is available via other platforms as well. So stay tuned till the end of this session to get the maximum benefit out of it. This is the ninth webinar in the Alt Extra series, which is curated by Alt Investor. Alt Investor runs India's largest community on alternative investments, and the Alt Extra series is proudly powered by Grip Invest. I am Yash Roongta, and I am your host for this series. While I have some key questions for these two gentlemen, which I'll discuss, if you have any questions, if you're watching this on YouTube, there will be a chat box. If you're watching this on LinkedIn, there will be a comment box. Put those questions in there. My colleague Devyani, who's in the background, will pick those questions up and put it forward to us, and we'll get them answered at the end of this webinar. Okay, all the housekeeping done. Let's get started. We'll start with you, Manu. You have been in the working capital and supply chain financing domain for a while now. Can you probably explain to the public what invoice discounting is and why do companies do it in the first place?
Great. So before I go into the knowledge session on the invoice discounting, for the audience, Credible, we are a fintech, and the beauty about us is that we are regulated. So Credible, while it's a trade name for us, we have a NBFC by the name of Equintia Financial Services. So whatever asset that we give out is through the NBFC itself. While the tech is something that we use for building the supply chain platform for the banks and the corporates, but all the lending is done through a regulated non-deposit taking NBFC by the name of Equintia. So that's the background. And on the invoice discounting, yes. So whatever the sale has been done by a manufacturer or a service provider, post shipped and post acceptance, the invoice is getting discounted. While in India, the concept of factoring has not taken that much steam over the past 2 decades or so. Various laws with the finance ministry have been passed, but factoring is something that on the scale up has not yet happened. Discounting is as old as banking is. So anybody who has a long credit period from his debtors, they usually go to a financier and ask for the early payment of these invoices. These early payment of invoices obviously attract a interest rate. At times, the interest rate is borne by the buyer of the goods, but in most of the cases, the interest is borne by the seller of the goods. So the differentiation between invoice discounting, invoice purchase, and factoring has a thin line depending on who's bearing the interest and who's bearing the recourse from the lender itself. So long and short of it, a seller of the goods presents the invoices, gets it accepted from the buyer, and a financier comes into picture to get the early payment to the supplier itself.
Got it. Okay. And I think you've probably answered my second question, but a lot of people know this investment option and especially as bill discounting. I come from Surat. In the textile industry, my father is like cash discount या फिर bill discount कर दिया, and it's very common terminology here. So is that exactly same as invoice discounting, or what's that thin line which people talk about?
Yeah.
And yeah, maybe you should answer that first, and then I'll.
Yeah, so any contract between a buyer and seller in India is governed by the Indian Contracts Act.
Hmm.
The sad part of it is that the Indian Contract Act is 1872. So obviously much,
Okay.
much prior to our grandfathers as well. So no more modifications have happened there. So a bill can be construed as a commercial invoice. A bill can be construed as a bill of exchange as well, which I think in the areas like Surat and major part of India is called as a hundi.
Hmm.
So from the regulator and from the law perspective, a bill can be an invoice, a bill can be a bill of exchange as well. So no demarcation as such. From the various circulars from Reserve Bank of India guiding banks to treat a invoice as a bill, a commercial performer invoice as a bill, there is no differentiation.
Okay, got it. And can invoice discounting only happen once an invoice is raised and goods are delivered, or there are exceptions to this as well?
So from the lender perspective, they can form their own policies, but
Okay.
from the theoretical perspective, a commercial invoice having been raised and having been discounted is the most prudent way in which a lender should discount the same. It depends on the lender's comfort with the both seller and the buyer. If they want to do it as soon as the invoice is issued, but not yet accepted. There are lenders in the industry who even take a lorry receipt or a GRN or a e-way bill to ascertain that the invoices is supported by a physical transportation of the goods as well. So what usually happens now, everybody is issuing a e-invoice. There
Hmm.
is a provision within the GST Council that the e-invoice can be cancelled within 2 days of issuance itself. So obviously, all of us know there are plenty of rosters in the industry as well. So it is usually good that we wait for 2 days, get the acceptance from the buyer, and then approach a lender for discounting the same. And the lender should obviously have the same policies within their credit matrix.
Okay, got it. So it's very lender specific and not there's no regulation behind it or anything like that. If the lender wants to do it, even without goods being delivered, they can do it.
Yes, and
Okay.
this is the checks and balances which RBI usually tells the lenders to follow a prudent practice, but this is very, very lender specific.
Got it. Okay. Uh, I don't know, Manu, if you have noticed, but there are lots of invoice discounting platform for retail investors that have popped up now. Grip also does their own structuring in the form of Invoice X as a deal. But we ran a poll in our community of 1,500 people. Around 40% of them prefer invoice discounting for their investment needs in the alternative investments domain at least. Why do you think this is getting incredibly popular? Like, why do people want to invest in this kind of asset class, from your opinion?
See, everything which happens in the industry is nothing but trade. And
Hmm.
trade can only happen when one supplies something and other accepts something. Most of the time, the bankers are not concerned with the goods. They are concerned with the documents. And invoice forms a very, very strong proof that the transaction has already happened.
Hmm.
Since it's a short term, self liquidating, and one end is where the cash flow is completely monitored. And that's why it becomes a very lucrative and a risk free proposition at a high XIRR for the investors to invest into. And that
Hmm.
is the reason when we started our fintech, the only thing that we do is supply chain. There's nothing
Hmm.
else that we do. And that is the reason that our delinquencies are minimal in the industry. We have been able to make large NIMs on the assets that we create. And since I and the other colleagues in the industry and the people that we have recruited have been into supply chain for over 2 decades or something. So this is a space that we understand, and this has been a risk free. Another thing which is largely a theoretic part is that when a bank does a supply chain financing, the capital requirement for the bank reduces drastically as compared to a long term financing or a simple working capital loans.
Okay.
So that's where the entire regulatory body across the globe prefers doing a supply chain financing asset creation as well.
Okay. Got it. Uh, I think I'll pick a audience question that has come, and Siddharth, maybe you can answer that. Can you give a real life example of, how invoice discounting works in practice? Maybe, take two companies as an example and tell where a financier would come in between.
Yeah, sure. Maybe to elaborate what Manu was highlighting earlier, let's take two companies A and B. A is a provider of goods to B, and hence B has to service B has to pay for those goods and services. So essentially, A will provide goods and services, will raise an invoice on B, and then B has to pay that money. And these invoices are typically 30 to 90 day invoices with the payable of 30 to 90 days. So let's say 100 rupees has to be paid by B to A in a 30 to 90-day period. Now, what A could do is A could come to an NBFC like Credible and say, we would like to get paid today and not after 90 days. Credible, looking at the balance sheet of A and the balance sheet of B, could tell A that, look, I'm going to give you 98, instead of 100 today, and I'm going to collect 100 from B 3 months down the line or 2.5 months down the line. And there is going to be an interest component attached to it. But essentially, that's how and there are a few variations of this. Credible or a NBFC like Credible could have recourse to the balance sheet of A, they could have recourse to B. The loans could be direct, to be both A and B or just one of them. So there are a few variations of this. But essentially, that's how the supply chain financing works. And ultimately, you're taking credit risk for a fairly short period of time on either of the parties. And that goes back to Manu's point on, the credit health is pretty good. You can take that view on someone for a short period of time and extract NIMs again, for short-term lending as a product.
Okay.
Manu, anything
Got
you
it.
would like to add to that?
Yes, so I think you covered it beautifully. Just that in the case of services, just to prove that the services have been delivered, that is something that the financiers usually take additional comfort from the buyer to ascertain that the services has been delivered. In terms of goods, there are plenty of proofs in terms of GRNs being notified, the invoices being stamped and everything. In terms of services, more checks and balances are required.
Okay,
And, and
got it.
and we are aware that India is largely a service-centric industry when it comes to software, services, manpower, and other things.
Sure. Okay. Manu, what type of borrowers generally come onto the to you, or have you have seen in the industry to get the invoices discounted? Like what
Oh, I think
sectors?
yeah, all sort of borrowers for the NBFC like us, which is on the base layer of NBFCs. We do inclusive financing. We finance to MSMEs to cater to their working capital needs. But in the industry, which starts from top tier MNC banks, going to large PSU banks, large private sector banks, then AAA NBFCs, all spectrum of companies and industries are being catered. The latest trend has been for the e-commerce companies who have been quite strong in accepting the supply chain financing with the likes of Flipkart, Cloudtail, Amazons. These guys are really, really big when it comes to supply chain financing. Since these guys are doing a lot of supply chain financing, their suppliers on the platform with the likes of new age companies, Bolt and all the electronic suppliers, they do a lot of supply chain as well. Another thing which has come really strong because of the Make in India, most of the renewable energy players, especially in the solar, they are really big on the supply chain finance, both on the panel suppliers as well as module suppliers. So this has been there. Historically, agri wasn't much into supply chain financing because most of the time the farmers are doing on cash and carry. But with the impetus on the agri-tech companies, which are plenty in both Maharashtra region as well as on the northern part of India, they are really big on the supply chain business now.
Got it. Okay, thank you. Uh, Manu, would you happen to know what are the different models available to retail investors today in India if they have to invest in the invoice discounting product?
Yes, absolutely. So we started this industry making in 2022, and the everything was started with the Reserve Bank of India coming up with two circulars on securitization and on assignment of loans.
Okay,
So, I mean, I will urge the audience to really go through these two guidelines given because for the last 30 odd years on the securitization, RBI was neither here nor there, and only the large ticket size securitization was done. So, securitization is nothing wherein our pool is kind of bundled up, sold to a new investor. Somebody gets rid of their asset and somebody builds a new asset, and the guy who is selling makes a scheme out of it. As simple as that. Another thing which I think audience who is interested in investment must have seen that last 1 week has been the standalone factor in the last 2 decades, where most of the private sector banks have sold off their assets, and this entire selling happened through securitization. And the word which is used is a PTC. PTC is nothing but a pass-through certificate, and the loan which have been sold off by the likes of HDFC, ICICI, IDFC are the auto loans, gold loans, and the stuff like that. Trade financing assets in India is just in terms of gaining momentum, as we mentioned, and both the investor, both the regulator are gaining a momentum around it. So in 2022, what we did after the circular came in to pool the trade receivables that we have built on and sold it to a investor, and the investor which came in was another NBFC who wanted to build their supply chain assets. And the journey started. We do PTC transactions every quarter, and then we thought of tying up with a platform like Grip, who is obviously regulated. And we thought, why not a retail investor, even employees within CredAble, they should invest in such asset class. And then we took guidance from RBI circulars, spoke to people at the regulator itself, and then we thought, why not break these asset classes into smaller tranches and give an option to a retail investor to invest through a very well regulated platform like Grip.
got it. Okay. Is there so a lot of questions coming in from the audience actually whether invoice discounting is regulated or unregulated? As I understand, the PTC or the SDI that you create out of the pool of receivables of invoice is regulated as per the
Yes.
securitization rules of RBI or maybe SEBI, one of them. What about, regular invoice discounting? I just go onto a platform, or, maybe my father is dealing with a supplier, and the supplier says ki 5 रुपए कम देना 100 रुपए पे. All of that kind of structuring or all of that financing, if somebody external comes in, is that regulated by any chance?
See, and in terms of making a website or a app wherein a buyer and a seller can come and talk to each other, no problem in that. But wherever the flow of money has to be there, that has to be regulated.
Okay,
Because from the lender perspective and from the regulator perspective, the regulator at all time needs to know where the leverage is going.
okay.
And that's where I think most of the things from the RBI is now coming on in terms of microfinancing, personal loans, BNPL, because these things weren't regulated. The people who are enabling the financing were not regulated.
Hmm. So, I don't know if you can answer this question, Manu, but there are platforms nowadays which are very popular amongst retail investors, facilitating invoice discounting. A company would come in and, invoices would be 2, 3 crores, and, 200, 300 investors would discount those invoices. Uh, and the stance is that this is not illegal, although it is in the unregulated domain, but it's not illegal. Any opinion around that?
So from a very personal opinion, I will not
Sure.
recommend to for a retail investor to invest in such kind of instruments, because if something goes north or other something goes south, then it's very difficult to get the money out of such platforms. See, P2P is completely banned by Reserve Bank of India now, and what is currently happening in such platforms which are not regulated is nothing but P2P lending.
Sort of P2P lending. And
Yeah,
unfortunately, Manu, even I lost some money on some of these platforms
yeah.
in one deal that went south last year. But lesson learned, I guess. Uh,
Maybe Yash, I'll take that question, and there are two facets to regulation. One, of course, the underlying product itself needs to be regulated, but also as a platform, what can you distribute to retail investors? That piece is also regulated. So while a non-NBFC might choose to undertake invoice discounting, that activity itself is not illegal or needs to be, I guess, entirely regulated. But if that entity then chooses to bring in, several hundreds or thousands of retail investors, um, without that entity, with being an NBFC, so there is no RBI, there are no RBI guidelines being followed. The paper might not be listed, so there are no SEBI guidelines being followed. So essentially, you are distributing an unlisted uh, invoice discounting opportunity, an unregulated invoice discounting opportunity to retail, and that then becomes a challenge from the regulator's perspective.
okay, got it. No, but yeah, I mean, it's surprising that these platforms are so popular right now, and there has been no regulatory action, and people have generally made a lot of money, which has given them a lot of confidence that nothing can go wrong in invoice discounting. But yeah, everything is hunky dory until everything goes wrong. So we'll have to see when that turn comes around. So talking about invoice X or the PTC or SDIs of invoice receivables, that is a regulated product. What happens if investors still lose money in that product, or what sort of protections are there in that product? Manu, would you like to take that?
Sure. I think I just go a step back in terms
Yeah.
of the various parties who are involved while creating such a invoice X product. Obviously, on one end is the actual transaction between a seller and a buyer, which is
Okay.
further lent by a regulated NBFC like us, which is Equintia.
Okay.
Once the asset has been created or the pool has been created, we get the pool rated by a big four rating agency.
Okay.
Once the rating agency has given their rating, which is the top notch rating, which is A1 or A1 plus, it is mandatory to appoint a trustee in between.
Okay.
Now these trustees are again regulated. When the trust is created and the pools are there, the entire money flow has to be completely regulated and reported. In terms of the platforms who showcases these things to the retail investors, platforms like Grip, who are completely regulated, having working under a license from the SEBI itself. So out of the entire five parties, three parties are completely regulated, or rather four parties are completely regulated: the lender, the rater, the trust, as well as the platform. So having such a strong regulatory mechanism and compliance feature coming into a transaction like Invoice X, I think it makes it such a strong one. In terms of the risk mitigate, whenever we issue a PTC, we always put our skin into the game, which is called
Okay.
as a CE, which is credit enhancement, and we place the credit enhancement in terms of a fixed deposit within the trust itself, so that a percentage of a losses which is far above than the historic trend of NPAs is already there. So this gives a lot of cushion to the investors in terms of something to extent of 8 to 9 or the 12% going back. Then out of this pool, I again purchase a part of the equity, or rather put I equity in this product, which further enhances the credit itself. So these are plenty of mitigants which do it, and the another stronger one is everything is short term. It is not like a 15, 16 year kind of a loan which is like in a home loan. Everything gets done within a period of 6 to 9 months. So everyone has a win-win situation here, and that makes it a very strong and a risk-free high return instrument as well.
Got it.
And
Okay.
maybe, Yash, I'll just add one more point to what Manu said. In addition to all the good pieces that Manu spoke about, there is also ample diversification in the underlying pool of invoices. So we generally see the norms is there'll be invoices for company A, and those invoices will be discounted. There is no diversification for the underlying invoices or the companies or the sectors or where they're located. But with a credible, for example, we would undertake the transaction, and like our a couple of transactions that we undertook with credible had 38, 40 underlying anchors. Most of them were investment grade rated. There were invoices against several parties. So those are additional that's additional comfort that you're not relying on only one party to pay your bills. And one of the pieces that there are often escrow mechanisms in place. There is, credible itself would have FLDGs from certain anchors. So those are again on a case to case basis additional points that can help secure a transaction further.
Sure. Siddharth, we lost you midway, but what I'll do is I'll quickly summarize for the audience. In an invoice X transaction, there are couple of anchors. By
No, no, no.
anchors,
I think there are more than 15, 20 anchors.
more than 15, 20 anchors. So
Yeah.
anchors mean there are different companies, within that pool,
Yeah.
with a variety of invoices, variety of, maybe sectors also.
Yeah.
Depends on how the pool has been structured, and then a very big rating agency would take up that pool and give that rating. So all of that adds a lot of diversification, sector-wise, company-wise, even buyer or purchaser or lender, not lender but seller. It adds a lot of diversification to the pool.
Yeah.
But in your regular invoice discounting, you are when if you are going to a fintech platform and discounting any particular invoice, you're just discounting one invoice of that particular company. If that invoice goes south, if the payment for that invoice doesn't come, it's highly likely you can lose 100% of your capital. Whereas in an invoice X transaction or similar to invoice X transaction, there can be bigger invoices, but because you have 300, 400, 500 different invoices, your exposure to one particular invoice can be very, very limited as well, which adds
Yeah.
to a lot of diversity.
Yes, just to add to this, as per the regulation, I cannot make a PTC until unless I have seen two cycles of a trade within
Yeah.
the lender ecosystem.
Yeah.
So I have a history, then only I can ask an investor to put their money into.
This is called minimum holding period, right, Manu? Or something like that.
Yes, yes.
Okay, awesome. And Manu, what are
Yeah,
the
this is
general?
tracked.
Yeah, sorry, go ahead, Siddharth.
Sorry, just one thing that also in addition to again what Manu said, the if the buyer these invoices are also that are securitized, they also need to be accepted by the parties.
Yeah.
So at that point in time, the risk of delivery of goods and services and those goods and services being adequate is not does not exist because the invoice has already been accepted.
Correct.
Okay, awesome. Got it. Manu, what is the kind of returns that one can expect out of this product? I know it's subjective, dependent on risks, but what's the general range?
So in terms of the absolute IRR, I think
Uh-huh.
a double digit is obviously there, but the range could be between 11 and a half to say about 13.
Okay, got it.
Anybody who's
And
expecting more than this, the risk factor increases. So this is, I think, is an optimum range in which the people should accept it.
okay, got it. And Siddharth, for the Invoice 6 transaction, what can investors exit midway if they want to? If I invested in an Invoice 6 transaction, I want to sell it off maybe 3 months later. What's the possibility of doing that?
Sure. So, the beauty of invoices transactions is that these are short-term papers, right? We have undertaken at Grip, we have undertaken transactions that have been anywhere between 8 and 10 months, and a couple of them have actually been with CredAble. They also, for the first 6 months to 7 months, typically the investor receives only an interest payout, and in the last couple of months there is a principal amortization as well. So there is, you know, these transactions are often unlisted. There is, I wouldn't say that there is a thriving bid-ask spread market for such papers, and there is easy price discovery. But the good part is that they are short term, and we would expect investors to stay invested for at least 7 to 10 month period while they invest in such transactions.
Okay. But again, just to bring that question up again, if they want liquidity 3 months down the line, is there a possibility to sell it in the secondary market or the platform buying it back?
Yeah, so I think it's not something we would, as a platform, we would provide certainty for. It's definitely
Sure,
something that we're always happy to aid our investors. I would say that, an investor comes back to us and says, "Hey, I would like to exit a paper for XYZ reasons because they need liquidity and so on and so forth." I think we are open to such conversations. At the same time, I wouldn't say that it's an obligation uh, on a platform like ours, but it's
sure.
definitely something we can try to enable out of goodwill and but without any strings being attached to it.
Okay, got it. Awesome. I think I am done with all my questions, but we have received at least I can see at least 50 questions on my docket. So I hope to close it within the next 15-20 minutes. So let's get started onto the questions. Manu, first one is for you. So, in case the buyer of a product or whatever service for which the invoice is being done finds some of these goods to be defective and the payment gets delayed due to resolution not getting reached, what is the recourse to an investor's money? Like, will they face a default? Will they face a delay? What happens to the discounted deal?
So this is a very statistical question because when we make such a pool, prior to that 6 month, 1 year, we have seen the history between a buyer and a seller itself, and we know how much is the rejection rate with the buyer itself. When we discount an invoice through our NBFCs, we only discount 80%. So 20% is already taken care of. In most of the cases of these programs, we carry a corporate guarantee or a FLDG from the buyer itself. If something is going south, there's some commercial breakout between the two parties. We tell the buyer that we have the security from you. You have to resolve it because we have already lended under the instrument, and on top of it, you have given an acceptance on the invoice itself. So these are the major risk mitigants, and these things usually don't happen. But something which has not happened in the past, there is no guarantee it will not happen in the future as well. And that's where the great enhancement that we have given kicks into picture.
Got it.
So
Okay.
the first comfort is the 20%. Then there is the law which can bind the buyer to pay. Worst case scenario, I have given my credit enhancement, and that can be dipped into.
Got it. Okay. Uh,
And maybe
so
Manu,
the
if I can
yeah,
add sorry, if I can add a question to that, there are also a lot of these invoices are also insured. Um, there are government agencies that insure such invoices. There could be third parties. Could you also please throw some light on that?
Yes, so in terms of trade credit insurance, that has been done for few decades in the industry itself. For a seller who goes into a commercial dispute, obviously he has already paid a premium to an insurance company, and he is very sure that the payment will be paid by the insurance company. The only thing is that there is a lag between when the insurance company pays to these claims, and these lags are covered by the credit enhancement structures that we usually take care of.
got it. Okay. Siddharth, question for you. At the start, I think you mentioned that invoices are generally for 30 to 90 days, but you are saying the invoice X deals are for 8 to 10 months. What happens if the invoices get matured in 90 days? How is the deal longer than the invoice period as well?
Yeah, no, that's a great question. So, you know, uh, there are opportunities in the market which are, in our view, unregulated, and those are sometimes 60 to 90-day invoice discounting opportunities. But again, we don't think they are regulated for particularly for retail distribution. Maybe I'll take an example of the transaction we undertook with Manu and CredAble. So that was a 9-month transaction, out of which during the first 6 months, the investors would receive an interest payout only. And in seventh, eighth, 9 month, they would receive principal as repayments as well. Now, what CredAble would do is, as the underlying invoices mature in 30 to 90 days, they have the ability to reinvest the money that comes in new invoices, which are then again for 30 to 90 days. So we call this a replenishment structure. So for the first 6 months, CredAble, in this instance, for example, would replenish that pool of invoices. Each of those replenishments are undertaken in accordance with a sandbox or certain requirements that CredAble and the investor would put in place on day one, and then CredAble would endeavor to meet the replenishment of invoices within the requirements of that sandbox. And they would send a report to the trustee. The trustee would approve the invoices, and CredAble would go ahead and then replenish the pool.
Yeah.
So it's a win-win for all the parties because, from the investor's perspective, they get to achieve a better multiple on their invested capital over a 7 to 8 month or a 8 to 9 month period. They don't get money back in 30 or 40 days. From CredAble's perspective, they incur certain transaction costs in bringing this opportunity out, and they're also able to keep the money for a slightly longer period of time, and it's a better return for them as well.
Yes. And Yash, I think you can encourage your potential or the existing investors to read all the structures which is available publicly. I think because these instruments are rated and regulated, all the information has to be made public.
Sure. Okay. Um, okay, perfect. Thank you. Manu, question for you. Is invoice discounting majorly with recourse to the seller or to the buyer?
Seller.
Always the seller, or in some cases, buyer as
Majority.
well?
Majority to a seller, but there are various structures. At times, the buyer provides a corporate guarantee. So there is a contingent liability in the balance sheet of the buyer as well, which creates a recourse.
Got it. Okay. Uh, question for you again, not for Siddharth, because that might give a biased answer from Group's perspective. But I think Karthik has asked some invoice discounting companies or platforms right now in India allow the use of credit cards to
That has
discount
been banned now.
invoice.
That has been banned now.
That has been banned, yeah. But I think they're still allowing that, which skyrockets the return on investment. Of course, the gentleman has asked if it's allowed. You're saying it's not allowed, but do you think it's illegal as well?
It's illegal.
Okay, got
It's
it.
illegal now. RBI has come back very, very strongly.
Uh-huh.
I had meetings with Mastercards and Visa as well. They
Hmm.
have rolled back their products.
Got it. Okay.
Vendor payments through credit cards is not allowed.
Okay. Got it. Uh, okay. Another question is how, again from Karthik, how many invoices with multiple buyers and sellers can be, crunched to offer in one particular invoice X transaction? Or, like, is there any limit to that, or it's, dependent on the NBFC?
The question is to whom, Yash?
Manu, you. It's,
Okay, so I think there is no limit. The only pain if the invoice is of 2 rupees, 3 rupees causes a lot of operational hassle.
hmm,
It is more to manage the operational part of it that a threshold of say about 50,000, 60,000 in the invoice value is being considered for. Regulator is silent in terms of number of invoices. But from our perspective, since our transaction for say about a 50 crore asset might be having 50,000 invoices. So this is something which is quite open. We want to diversify our risk across various sellers and various buyers. The more the merrier for us, but as long as it's operationally not very cumbersome.
got it. Okay. Siddharth, question for you. What is the difference between the unregulated platforms that are offering this and, GRIP? I know this whole webinar we have talked about that, but if you had to summarize the main key differences, what would those be?
Sure. So I think I would speak about a couple of key differences. I think the first and the foremost, the largest difference is that uh, the opportunity itself on grip is often with an NBFC, or even if it's with a non-NBFC originator, there is ample skin in the game with the originator. And by that I mean, what Manu mentioned earlier, CE or credit enhancement. So there is the investors, sorry, the originator's own equity, which is junior to the investor's money in the opportunity. And the second one is a cash collateral that is also offered by the originator. So that and then there is a diversified pool of loans and sorry, invoices and so on and so forth, right? So I think that is one big difference. I think the second big difference is that the opportunity that Grip brings to its platform is regulated by either RBI or SEBI or both. Uh, Several platforms do not, they undertake transactions with non-FIs, so they are not RBI regulated because non-FIs are not RBI regulated, and they don't list those transactions, so they're not SEBI regulated either. And the regulation needs platforms like ours to ensure that the opportunities we bring to the investors are at least regulated by one of those two governing or regulatory bodies in the country. So I think that's the second big difference. And the third is that if something perhaps goes south, again to what Manu was saying, while there is credit enhancement and so on and so forth in the opportunity, ultimately you will rely on collections from the pays of those invoices. And when we partner with an NBFC like CredAble or a non-FI with ample track record, they would have large collection teams. They would have a lot of track record of ensuring that what happens if an invoice is not paid on time. They will have SOPs around going and recovering those invoices. So I think a lot of transactions on other platforms, while might look on the surface have the same color of that as an invoice counting, but if something goes wrong, the underlying receiver of the invoices will not necessarily have those kind of collection capabilities. And that's perhaps the third biggest thing that differentiates us.
Okay, got it. Manu, again, question from me actually. Do you think retail investors should invest in invoice discounting as an asset class? Like, what's the, I mean, these products are not so simple to understand also sometimes, right? So, where do you stand on that? Like, should retail investors participate?
So that's a very, very a complex question because investment decisions are not driven by logic. This I have
Sure.
seen through my life. There are people who are investing in bitcoins. So I think which has no head and tail to it. My personal opinion, not regulated at all. Something which is regulated and something on the retail investor who understands the B2B businesses. I think they should really give it a shot, and diversification of the investment pool of a retail investor is very important.
Hmm.
I'm not saying that if an investor is having X amount of money, the entire X should be invested in a complex product like Invoice X, but X by 10 or X by 5 should be there, because the more the diversification, the returns would be much better, and the risk would be minimal.
Okay, got it. Um, so that, yeah,
Yeah, Yash, your question, did you mean investing in investors should be investing in invoice discounting or invoice X? Or
both.
were
I
you
mean,
clubbing invoice
as
discounting? Both
as an asset class together. Like, so,
as an asset class.
invoice. Yeah, yeah.
Sure.
So, any thoughts?
Uh, yeah, look, I'm, you might blame me for a biased opinion here, but I think at Grip, the opportunity to undertake the invoice discounting, and I'm differentiating that from invoice X, um, existed for a very long period of time. There have
Sure.
been, again, you mentioned earlier, there have been platforms that have been doing that for now more than half a decade. I think we took a conscious call to have similar features and take all the goods of invoice discounting, but have it in a manner which we like, which is RBI or SEBI regulated, through invoice X with ample security, what Manu alluded to. So I think I might be biased from that perspective.
Yeah, so I think
Sure.
I
Okay.
give another picture as well. For an NBFC like us having a capital of, or other our own capital of 2 billion, we only choose to do one kind of products, that was invoice discounting. So, and obviously we employ 300 odd people as well. So one
Sure.
asset class is giving jobs and salaries to 300 odd people. So that is a conviction from the NBFC side that we have in a product like invoice discounting.
Got it. Okay. Um, Manu, question for you again specifically. Do you do invoice discounting of startups?
Yes.
Okay.
And how do you
Um,
define a startup? Amazon is still a startup, huh?
Amazon is not a startup. I mean, they're way beyond a startup now.
So with the classification in the Ministry of Finance, Amazon is still a startup.
Oh, wow. Okay.
Yeah, yeah. And
Uh,
similarly, Zomato is still a startup, huh?
okay. Do you think the preference is invoice discounting is much more suitable for cash flow intensive companies because cash flow keeps on coming in, existing invoices can be paid, or
Yeah.
is it more suitable for that kind of company,
Yeah,
those kind of companies?
absolutely. Yeah, yeah, absolutely. Somebody who is into quick commerce, or somebody who is having a shorter cash flow cycles. I mean, that's where such businesses or such kind of transactions are quite prominent. Somebody who's a EPC player, building bridges, building buildings, this is not a product for them.
Got it. Yeah, there are other financing options for them. But
Yeah.
Yeah, but
uh,
also, yes, it depends. For example, that startup is providing the goods and services to what kind of entities, right? And so,
hmm,
for instance, if that's providing services to the Unilevers, the Tatas, the your double A's, A-rated companies, ultimately for the receiver of that invoice or the financier of that invoice, the receiver, the risk is on Tata paying the money, right? In
sure.
many such instances. And so I think it's important to look at that as well, while there could be recourse to the startup and so on and so forth. That's an important distinction as well.
Yeah. So just adding to it, just taking example of a startup which is credible. 7 year old journey, and we build softwares for large banks in India and overseas.
Okay.
So these are the receivables from that entity or other in our entity which are expected, but we don't discount those because the cash flows are quite linear on a monthly basis. So we are happy with that. So a startup supplying to what Siddharth was alluding to, a AAA corporate Tata's, we build software for banks like Kotak and for Axis. So that has a regular flow of money as well.
Okay.
On your question, whether we discount invoices of startups, you mean startup is at the seller leg or the buyer leg?
The gentleman only mentioned startups, but I'm assuming, yeah, the person is running a startup and maybe selling to someone else, and he wants to get his invoices discounted,
Yeah,
something
so
like that.
there's an interesting question which has come in from Venkat. Can I invest in CredAble directly instead of Grip?
Yeah,
Uh, Investment in CredAble is only via equity buddy, so
yeah,
it will be very difficult.
yeah. No, I said him no. Like, it's not that simple, but yeah, sure. Okay, I think we are done with all the questions. We've already talked about the risks. I want to make it
Sorry,
abundantly clear to the, yeah.
I just want to answer. Sorry, I just go back to my first question. Actually, when Manu was
Siddharth, we are
answering
losing
directly.
you. Siddharth?
Siddharth, you
Oh,
may switch your
Am I
video off.
audible?
yeah, you are. Maybe switch off your
I can
video and
try.
then, yeah, go ahead.
Am I audible now?
Yeah, yeah,
Is
much
this
better.
better?
Yeah,
Yeah, sorry about that. So I was saying that while Manu did answer that in a lighter vein, actually Venkat, if you invest in CredAble through the Grip platform, you are actually investing directly in CredAble. Ultimately, Grip is an originator and a structurer of the transaction, but the units are your units will be held by a trustee, and the trustee is acting on behalf of the investors, and the trustee essentially has given money to Credible. Now we are, of course, originating the transaction, structuring it, ensuring that the transaction works for all parties. There is ample risk. There is a separate set of eyes that has looked at that transaction and brought you that transaction. But you are actually a direct investor in Credible through that transaction, and with a
okay,
trustee as, of course, the custodian of your capital.
okay, got it. Uh, Siddharth, one more question, interesting question for you. There is a mention about insurance coverage for the invoice discounted value. Are these insurance policies taken by GRIP or the seller? Can you help us understand how the investor's money is secured?
Yeah, sure. So these insurance policies are not undertaken by Grip. These insurance policies are often undertaken by the seller of the invoice, and maybe I'll add some more color to it. The seller typically takes a turnover insurance from the insurance company, and what that means is, if the seller has 100 rupees of revenue from, let's say, 100 sources, 100 uh, pays, let's say, creditors, the insurance company will come in and say that, look, we don't want adverse selection at the end, at your end. We see your book of pays. You have 100 rupees of revenue. We are going to insure your entire book, and all the revenues, right? And that's called turnover insurance. Of course, the coverage of that turnover insurance is linked to the quality of the pays of the revenue to that company, and the duration, and so on and so forth. So there are several factors that determine the coverage of the insurance itself, but essentially it's a turnover insurance that the seller would take, and the financier of that invoice then ends up being a beneficiary, a co-beneficiary of that insurance policy as well, should something go wrong with the invoice that they have financed. Manu, would you like to add anything to that?
Yeah, just that GRIP under the current regulation of insurance, ADA, they can't take insurance on such things.
There's a talk about CDS, right? That mutual funds will start taking CDS or something like that, and Some
I
platforms are
think
even exploring.
maybe 2 years back. I want to take insurance on my assets. I can't take it.
Sure.
So,
Yeah.
so
So
the
I think
insurance,
sorry, go ahead, Manu.
yeah, the insurance sector currently in India does not allow it. The Western world, such kind of protection by insurance companies is allowed to lenders, but in India we have to make some amendments to it.
Yeah, and also, there is uh, what you mentioned yes about CDS. These are, of course, relatively new proposals, and they should definitely take off in the next 2 to 3 years and have much wider market acceptance.
Okay. Sure. Uh, I'm going to take the last question, which unfortunately this question comes up in every webinar and is the most popular question. Siddharth, for you again, actually. Why are regulatory people or why is the finance ministry eating 25% TDS on all sorts of interest payments done by structured products? Why can't they make it 10%? Why can't they make it 0%?
You know, I'm not a spokesperson for the Ministry of Finance or Ms. Sitaraman, uh, but I think uh, I can only say I'm not sure why that exists. In corporate bonds, there's a 10% TDS. In securitized debt instruments or PTCs, there is 25% TDS. I can't say why that exists, but I can tell you that ample representations are being made, have been made through various forums, industry bodies, to the finance ministry about this challenge. It's anyone's guess when it, it will get resolved, whether it will get resolved. That's anyone's guess. But it's something that I empathize with this investor's pain, and it has been taken up by several bodies and including, of course, by GRIP directly and as well as to industry bodies.
Yeah. Manu, any thoughts around that as well? Like TDS?
We all are in the same pool.
Okay.
So, yeah. So I think for a developing country, I think these things will keep on carry on till the time the financial prudence reaches to every nook and corner and every strata of the population. These measures will obviously be there because a very, very minuscule proportion of investors invest in structured rate instruments, and that's where the government is kind of trying to make money out of it. But I think
Hmm.
in our lifetime, I don't see it coming down.
Okay. Awesome. Okay, I think we are at the end. There are a couple of questions, but we are out of time. So, for our audience who still is interested and has more questions, please feel free to reach out to me. My email is yash@thealtinvestor.in. Ping me on LinkedIn, drop me an email, or join our Alt Investor community. We'll have a link in the description shortly once this video is published. And thank you so much again, Manu and Siddharth. Really, really appreciate you guys taking out the time amidst your busy working out schedules as well. I know, Manu, you're going to go for a game, and Siddharth, you just came from a game. So, no, fitness first, but no, thank you for taking out the time for this as well.
Thank you, Yash. And I think
Yeah.
we should have such sessions regularly as well because the industry is changing. And I think it's the more we talk about it, I think the more awareness among us and with our dear investor community will keep on growing.
Yeah, thank you, Yash, for hosting, and no better way to start the weekend, by talking fitness and money. And yeah, looking forward to interact with you and Manu and all of our investors once again in near future.
Awesome. Thank you so much, guys. Thank you. I'll stop the recording now. Thank you.
Thank you. Bye-bye.
Okay. The recording is stopped, but again, thank you so much, Manu. Appreciate it. And thanks, Siddharth. Happy to chat whenever needed.